Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Okay, awesome. Also, just want to welcome everybody here. Also want to welcome all those new with us in the program today. If you are new, let us know, and I would love to welcome you here. Let us know what state or what country you're from so we can welcome you. Um, Yeah, and I'm excited. This is a good class to be to. This is the Sentiment Lab. It's also known as the Overnight Trading Webinar. In fact, I think I'm just gonna change the title actually as well because it is Sentiment Lab. It's also just Overnight Trading slash Sentiment Lab, right? So I'm just gonna update that name here real quick. It used to be just Sentiment Lab, and now we kind of do sentiment and overnight trading all in the same thing. All right, awesome. Okay, well, let's go ahead and get started. As we get started, I need to go over our disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's dive into this. So the conversation is about sentiment and overnight trading, right? So what I want to do tonight, a couple of things I want to accomplish in this webinar. So I want to explain how we use sentiment in conjunction with the scanner because we talk a lot about COT data throughout the week and throughout pretty much all the webinars. We even have a class on COT report data in an hour, but we don't really have a class on why we use sentiment. But that's a third of the scanner. A good portion of the scanner is comprised of sentiment data, right? So I want to make sure that everyone knows what sentiment data is and how we use that, and then lastly, how we use it in terms of an overnight trade, and this has kind of changed over time because now we use the scanner pretty much exclusively to pick overnight trades, obviously, as well as the weekly trades. But there's been, it's been pretty popular to try to find an opportunity to trade overnight. And so I want to make sure everyone's on the same page on how to do that, the how to place the trade, what trades to take, how to put a stop loss in, all that kind of stuff, right? Okay, so first of all, let's talk about what sentiment is. Let's actually go to the scanner to explain what sentiment is. I think that's a good place to go. So let me just pull up the scanner here. And as this is loading up, oh, here it is. Okay, I just want to explain just some basic details. So when we talk about sentiment in the market, sentiment is a metric. So right here, you can see sentiment signal. Sentiment is a metric that looks at what retail traders are doing. So who are retail traders? Retail traders are people like you and me. They're just the average trader in the market. People who just have their own, brokerage account, and they just take speculative trades with the purpose of making money. There's no other purpose behind it, nothing to hedge. It's just all about, hey, I'm just speculating here to make a profit, right? Those are retail traders. So that pretty much includes everyone here in this call today. Anybody watching this in the recording, you're most likely a sentiment slash retail trader. So we don't really look at bank data. We're not looking at what the banks are doing with the sentiment index. We're pretty much just exclusively looking at what retail traders are doing, right? You'll notice here on the scanner, there's the sentiment signal right here, and you've also got uh, the percent long and the percent short in these two columns. These two columns are a representation of the percent the percent long and percent short of each individual currency pair as far as retail traders go. So if I filter this percent long right here and the big bars float to the top, what that means is on these particular currency pairs, those currency pairs have a really big interest in going long, Okay, so retail traders are buying a lot of euro franc right now. They're also buying a lot of pound franc right now. They're buying USD franc, they're buying CAD franc, they're buying silver, they're buying New Zealand franc, right? So that's what the retail traders are doing. Now, why is this important? Why do we want to know what they're buying? Well, we want to know what they're buying because usually they're not very good at trading, right? Newsflash, right? Like most retail traders don't make money in the market. And not only that, but let's look at what retail traders do. So if you if let me put it this way, and I'm not calling anybody out, but if you're still an unsuccessful trader, go back and look at your order history. You'll typically find that your winners are not the average time span of your winners are not very long. So you're not holding your winners for a very long time. This is how I traded, especially several years ago. Okay. In my early days trading, this is how it was for me. So when I'd go look at my order history, I would notice an observation I made was that most of my winning trades uh, did not elapse a lot of time. So those trades would open and close very, very quickly. Another observation I made about the losing trades is that they were open a lot longer. Okay. So I was holding losing trades longer than than my winning trades. Because that is true for most traders. So as a collective group, that would be the same finding or observation if you were to look at the order history of practically every retail trader who is unsuccessful. Now, because of that, when retail traders pile into a position, they're usually piling into something that is losing them money. And they're typically holding that position for days and sometimes weeks on end, with the hopes that at some point that trade will indeed reverse and go back in their favor. Sometimes they get it right. Most of the time they don't, right? And so because of this, when we look at sentiment data, so just again, the percent long, the percent short of retail traders, when we look at that data, we as a group take a contrarian viewpoint to what retail traders are doing. Okay, so if most retail traders are buyers, we tend to be sellers. If most retail traders are sellers, we tend to be buyers. Okay. Now, is that going to make you rich? Well, yeah, it could actually, but here's the thing: is it going to make you rich overnight, where you just that's all you do? I haven't found that to be the case. Where I have found sentiment to be very powerful is if you can combine it and get confirmation across other indicators like the COT report, which is what we do with the scanner. Okay. So if you can get confirmation with the sentiment index, that seems to be very, very lucrative and very helpful. Okay. Okay. So anyway, but can you just trade sentiment as a standalone indicator? Yeah, you can. I've done it for years, actually. Before I had the scanner, I did it for years like that. I would just go and look at the most long or the most short currencies or currency pairs, and I would just go off of that. And I wouldn't confirm it with anything else. I would just legitimately just take those trades. And some nights it would be fantastic, other nights not. And I just didn't find the level of consistency I needed, just simply taking standalone sentiment signals. But if I had to pick a direction, I would pick against the retail traders every time. I would not try to trade with the retail traders because most of the time they're wrong. So, like, if you were to pull up a chart, like, let's actually do an exercise real quick. If you were to pull up, like, this Euro franc, this is the most bought up currency right now by the retail traders. As you can see, 92% of retail traders are buyers. Which direction do you think that market's going if 92% of retail traders are buying? Let me ask you guys, which way do you think that's going? If 92% of retail, I'll pull up the chat box here. I'll let one of you or a couple of you respond. Which way do you think, as like a overall 1 hour, 2 hour time frame, which way is that market going if most retail traders are indeed buyers to the tune of 92%? Yeah, you guys got it. Selling dumpster fire. And we know this without even looking at the chart. So we just detected that. We figured that out without even looking at the chart. So now let's go look at the chart. Let's pull up the Euro franc on a on a macro scale. Let's pull up like a 1 hour or 2 hour time frame. Where has this currency? Oh, yeah, there you go. Dumpster fire, right? Yeah, that's definitely right. That's a good way to put it. Here it is, right? So this is right there. It looks like it made a peak. That's November 21st. And ever since then, and actually, yeah, and even maybe even before, but at least since November 21st, the Euro franc has just been on this downfall. Uh, just absolute dumpster fire, like you said. It's been selling off. So we were able to detect this just by looking at the scanner. Now, one thing I want to note real quick. So when we look at sentiment data, sentiment is a great tool when you're looking for swing trades. So if and it can be used for overnight trades. We're going to talk about how you can do that in just a moment. But if you're gonna use sentiment as a tool to like if you're going to use sentiment to take a trade for the next hour or the next couple of hours, it's useless. I would say it's absolutely useless because it's not within context of what that indicator was created for, right? Um, what goes into it? What data goes into it? Well, it's what goes into it is retail traders who are so biased and so uh let's see, how do I put it? They're so committed is the word. Yeah, they're committed to their position. When do retail traders get committed to a position? When they're losing, right? Retail traders do not commit when they're winning. What most retail traders do is when they're up a bunch, they say, "Oh my gosh, I got to take this money off the table. I got to take this money. I need this money," right? And so they just close and take the trade, right? And when they're losing, they get quite committed because the other emotions there too. Let's talk about that emotion. So what retail traders do is they think, oh, this is losing, I can't afford to take this loss, I really don't want to fulfill and complete this pain of taking this loss. It's already as painful that I'm losing, but if I actually close this trade and take the loss, then I've now put a stamp on that loser, and it feels even worse. Whereas there's always that, like, that feeling of crossing your fingers, like maybe this will come back, I'll cross my fingers. And a lot of trades don't, right? A lot of trades don't come back. In my experience, in my 11 years trading forex, most of the time I've just noticed a lot of trades don't come back. Which is why I do two things when I manage risk. Number one, if you're going to trade, I have two ways to trade, right? When I'm managing risk. One is to have a very structured manner of setting up a stop loss, right? We do that with the weekly trades. You have your average daily range. And if the trade doesn't work out, we stop out. And that's unfortunate when some of those trades come back to win later in the week if they stopped out. But that is just part of the nature of the strategy, is just the willingness to stop out when things don't go in your favor. The second way to make money against retail traders, in my opinion, is to manage risk against retail traders, is to only add to your winners, right? So think about this. I guarantee that by the time this market came down to this area back at the beginning of December, at that point, retail sentiment probably flipped to a bunch of buyers, which would be a sell signal, right? And you could sell the euro franc. I think we sold the euro franc not just because of sentiment, but because of the crowded market. I think this was one of the, I know this was one of the crowded market signals. So we did actually capture a lot of these profits back in December because it was a crowded market signal, not just because of sentiment. But if you were trading sentiment alone, this could have put you in the right direction to sell this for the rest of the month. Um, but yeah, so adding to winning trades has the ability to really make trading against retail traders very lucrative, because as they're adding to their loser, you're adding to your winner, right? And so you'll have reciprocal, or I guess, yes, it'd be reciprocal results, right? they'd be opposite of each other. So you'd have one that's, one trader who's losing and getting a margin call on their account, and you could be passing a prop firm challenge, making a very large percentage return, especially if you're adding to that gain, right? Anyway, so that's the nature of retail traders. So a lot of the stuff I shared with you guys is stuff I've thought about and traded about for years, right? I used to only trade sentiment before I came across the COT report. Then I combined the COT report with the scanner, and that's been kind of my big revolution in the markets, is being able to combine the two, which I think is really awesome.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call, in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Any questions about sentiment and how sentiment works? I just want to make sure if you guys have any pending questions, make sure you put them in the chat box and I can get to them. There's no dumb questions. I take all questions and I answer all questions if you have them. Um, but sentiment's a cool thing. But like I said, just as a reminder, it's very important to trade sentiment in context. If you trade it out of context, it just doesn't work, and you might have a bad experience with sentiment, because it really is designed to kind of put you in a direction as a swing method. It's not really something that puts you in the right direction for, the next day or so, or even next week sometimes. That's why you like to get confirmation, right? Okay, so that brings us into the next part, which is how to trade this as an overnight strategy. So, like I said, if you're trading sentiment as a standalone, it's very difficult to make money on a daily basis and even a weekly basis. But sentiment is one of the most powerful tools, though, nonetheless, right? We cannot underestimate sentiment because it is very, very powerful. And one other thing I'd like to just express real quick: the banks make a ton of money when they can bet against retail traders. So if you can capture the bank trade, the bank direction, and if it aligns with sentiment, then you're looking really, really good, right? So I try to do that all the time. I try to get the bank data to align with what I'm doing, with sentiment, right? And that seems to give me a much more accurate weekly signal and sometimes even daily signal. So how do I use this, guys? So what I've been doing, so first of all, as a weekly trade, what do we do? What we do is we come in here, and I like to filter this by overall signal. Why do we filter by overall signal? Why is that important? The overall signal in the scanner, this column, so the second column in the scanner is the most powerful, in my opinion, the most powerful uh, column in the scanner because it doesn't just look at one piece of data. It actually compiles the score, the cumulative score of all the things we look at. So it looks at, if the market's in crowded market phase, it looks at if the weekly shift was strong or negative, strong positive or strong negative or in the middle somewhere. It also looks at the long-term data. So we have long-term non-commercial COT report data that gets put into the scanner each week. That doesn't change a lot on a week-to-week basis. In fact, this column right here changes the least, but nonetheless, it still changes. And so we want to get the best intel as to what the market's probably going to do um, right here. So the overall signal takes that into effect. What are the banks doing from a longer term standpoint? And then lastly, it also looks at the sentiment signal. So what are retail traders doing, right? And it combines all those things together and it says, okay, based off of this information and the COT report, both short term and long term, and sentiment, what is the signal? And then not only does it give you a signal, but it ultimately decides how strong that signal is, which I think is also pretty cool because it doesn't just tell you to buy, it kind of tells you which ones it really has confidence in and which ones it doesn't. Right. So, these would be your signals for the week right here because these are the ones that have the strong buys and the strong sells. Those would be your best. But if you had to pick any trade, these would be your trades. Now, I couldn't tell you necessarily which one is better than the other. We could probably dive in a little bit more, on, is it the franc yen or is it the pound yen or is it the USD cat? Which one is the best signal for the week? Um, I don't know if that matters a ton. I'm just trying to find, what's the top 5 or 10 trades to take this week. That's all I'm trying to figure out. And which direction should I go? Right. Okay, so as a weekly signal, what we've been doing is we come in here and we say, okay, great. As a weekly trade, we're going to take the full basket of trades. So if this is what we're given, we're going to take all 8 or 10 of these trades, whatever is here. We're going to take all of these. And then what we've been doing is we take an average daily range, which is right here. So this ADR, and that's our stop loss. So ADR stands for average daily range, and that's in pips. So we just take the number of pips and make that our average daily range for the week. That's the simplest way to trade the strategy is just at the beginning of the week to go into the market, take every single one of these overall strong buys and strong sells, plug in the average daily range, and make sure that your lot size is appropriate, right? So you want to make sure if you're going to take 8 trades, right? That's a lot of trades, right? I mean, it's the only 8 trades you'll take all week if that's the only strategy you trade. But you do want to make sure that the lot size is appropriate because if you lose, let's say it's a losing week and you lose 5 or 6 of those 8 trades, well, yeah, that could be a pretty big loss, right? So the way you manage that is by using a lot size calculator, which by the way, guys, I don't know if you saw this. I posted this in the Telegram, but I also added it to basic training today. Um, so in the base, I'm actually going to start really loading up the basic training even more with videos. There's already several videos in the basic training section on the website, but I added this video. It's just a 10-minute video on how to use a lot size calculator for oil. That also can be used for silver, gold, NAS 100, and US 30. So if we ever get signals on those, this is a great video that shows you the nuances and the differences between calculating your lot size for Forex versus how to calculate your lot size in some of the different things that we trade like oil, right? So that should be pretty helpful. Also added this video down here, the how to trade the martingale. So this is the modified martingale strategy that I've been teaching, I guess for about a couple of months now. This is a video that can explain how to do that. And this is, where how you reset your buy stops and sell stops every night. So if you want to go back and watch that, that's a good one. I've had a lot of success doing that, by the way, like a lot. Um, really made November and December like very lucrative. And I think it was because, we're just, again, you're adding to winners and you're not adding to the losers. If you have a loser, you put it in the corner, you put your loser in timeout, and you don't give him any friends, right? Don't give your loser any friends unless he decides to repent and come back and say he's sorry, right? That's kind of how I look at it. I don't know if that's a good, I hope that makes sense what I'm saying, but basically, if a trade goes in your favor, the way I trade the modified martingale is I add to the position as it goes in my favor, and I say, hey, you're doing well. We're going to give you more friends. Here's some more lot sizes. Here's some more contracts. We're going to milk this trade because you're going in the right direction. And if a trade goes against you, you don't add to it. You don't do anything. You just leave him alone. And if he decides to come back, then we give him, then we go ahead and uh, get him out of timeout and add to that position as it starts to come back. That actually happened to me on the pound yen this week. Pound yen initially went against me, Tuesday morning, and then I reset my trades last night. I put buy stops closer to the market. The market obviously ripped on the pound yen this morning, and I got triggered into two extra trades in addition to the trade that was down. Now that trade that was down is now positive quite a bit, and the two extra trades are also quite positive in a good way. That's the way that works. Anyway, that's all. That's if you want to read up or watch that, that's a good video. I'm sure we'll continue to do videos on that. If you guys are curious on how that works, but that's available now on the basic training library. Okay, so let's go back to the scanner. Okay, so I just kind of explained how to trade this on a week to week basis, right? And that's the simplest way. That's the bread and butter way of trading with the scanner because it looks at all the COT data, looks at all the sentiment, and it says, hey, we think these are the best trades. And then you can just go ahead and take all of those trades, right? Okay. Then the next way you can trade that is to do, like I just mentioned, the modified martingale. And I do adjust that every night. So I'll take the trades at the beginning of the week, just one market order. And then I usually have up to two more, maybe three more, not limits, pending orders, pending buy stops or sell stops, depending on the direction I'm going. And again, the way this looks, like I'll show you here. So with the euro or with the pound yen, this is what I do every night with the pound yen. Um, in fact, I have three or four different accounts that trade the modified martingale. And so I set up a copy trader actually that copy trades. So I only have to take this once and it does it for me. But basically, if this is the start of the week right here, this is where I took the trades at the start after New Year's. Um, this trade initially, I took an entry, just a buy order right here, and that trade actually went against me, Tuesday morning. So again, what do I do with trades that go against me with this type of style? I put them in timeout. So I'm like, okay, hey, I don't close them, but I don't add to the trade, right? I'm just like, hey, you're not working. I'm not going to add to this. You know, I'm going to put money on the trades that are working, but I'm just going to leave you alone. Right. And then what happened was last night. So this is Tuesday night. I went back into this account. And so I had buy stops that were, up here and right here that were set up the first night. And those never triggered. And so what I ended up doing is I brought these down. So I put a buy stop somewhere around here. And then I brought this buy stop a little bit closer, something like this, right? And so when this market started to come back and get happy again, I got into another buy. And then obviously I still have the original buy from the beginning of the week. And then I have this third buy order that subsequently executes as this market starts to rip to the upside. So now I've got three trades, right? And you could do more than three if you wanted. I just typically do about three. I've done up to four total trades, one market order at the beginning of the week, and then three buy stops or sell stops. But I try to limit it honestly just to two buy stops or two sell stops, just because I don't want to get one currency pair too heavy, right? And that's what I've been doing. So that what's been nice about that is I usually get enough scanner signals where, if a couple of these decide to not go in my favor, for example, this Euro Aussie, um, I don't think this one went in my favor, if I recall. Anyway, there's a couple of these that have not gone in my favor this week. And so again, what do I do with the ones that don't go in my favor? I don't add to them, right? The ones that do go in my favor, yes, we add to those, right? And that's how you can even make a 50-50 week with the scanner very profitable. Like the scanner, I believe, and I need to double check, what the track record is on this, but it puts you in the right direction 70 to 80% of the time, right? Most for the week, not necessarily on a daily basis, but for the week. So most of these are going to be accurate signals, which is awesome. But if you have a week where the average is below that, let's say, only half of your trades are correct and the other half are not. Well, you can still make that a profitable week because you're not adding to the loser and you're subsequently adding to winning trades, right? That's actually how you can reverse course and make that profitable, right? I've even done it with weeks where you only have a handful of trades that work out and the rest of them don't. Even if you just have two or three or four trades that really work out and you add to those, and let's say you have five or six trades that don't, you can still have a profitable week because you're not adding to the losers. So, I mean, obviously we don't want that scenario, but that has happened and could happen again, right? And so I'm just showing you a way you can do that. So I'm going to show you another way too in just a moment, but this is just another way you can do it. And I like this method. I'm really pursuing this method with like I said, I got 4 accounts doing this right now because it's been one of the most successful methods that I've got. And I like it because I had one account where the bread and butter method, which is just simply taking the trade at the beginning of the week and then you put an average daily range stop loss in. I got stopped out on this trade, which really stinks because on that account, because this is obviously now extremely profitable, right? We're really ripping to the upside here, which is what we picked at the beginning of the week. It just had a detour along the way, right? So, um, so in that account, that one stopped out, and there's nothing I can do about it. I have to wait till the next batch of trades and just leave the ones I still have open. However, with the modified martingale, I have 4 other accounts that are trading this, and that's really nice because what I do is every night I come in. So this is why I call it an overnight strategy. You're still you're still taking these trades at the beginning of the week, but you're readjusting the buy stops and sell stops every night. Every night you're readjusting. Okay. So what does that look like when you're readjusting? And by the way, feel free to put your questions in the chat box as I explain this, because sometimes I forget details because I operate in my head sometimes and I just think I know what I'm talking about. And I forget that maybe I haven't transmitted that to you in a very successful way. And I apologize, I will do my best I can to get that information to you. But ask those questions as well, and I'll try to explain things. And that's why we do classes every day, right? It's just because we always have to teach, right? And that's why I'm here. So let me try to explain this again. So what do I do? Like if this is a new night, let's say, or let's rewind this. Let me show you what this looks like. Let's actually delete everything on here. Let me do a rewind. Yeah, I'm going to just delete everything and I'm going to put everything back in just a moment. So this is the beginning of the week right here. Okay, so if this is the beginning of the week, what I'm going to do at the beginning of the week, let's actually rewind even further. Let's rewind to exactly the beginning of the week right here. So if this is where I'm going to take the trade after New Year's, what I'm going to do, if the scanner says, okay, you're going to buy this, right? Because it does say buy right there. It says strong buy for the week. Okay, we know that that's the direction we want to go. Then we go back to the chart and we execute an at market trade. And this is usually a smaller position. Just so you know, I typically do about 0.04 contracts for every $50,000 I'm trading. So if you're trading a $100,000 account, I usually start with a 0.08 contract. If you're trading with 200K, I usually do a 0.16 contract. You can do what you want to do, but that's what I've been doing, and I've had a lot of success. My drawdowns have not been pretty bad. In fact, they've been so good. My drawdowns have been so good. I think I need to lever up more because I haven't had huge drawdowns, at least yet, doing this. Um, anyway, but I'm kind of a conservative guy. I feel like I've been blessed throughout my life because I do risk money, but I do it in a very thought-provoking way. And I've always done things this way. And I feel like in the long run, I've always benefited because I've just done things this way. Whenever I do any type of investment, I do invest because I recognize I got to put money out there to make money, but I always do it in a very just, like conservative way. So a lot of people tell me, "Hey, you could make a lot more money if you did it another way." And I know I probably could, at least in the short term, but I try to be, like I said, I just try to be very conservative with the way I do things. Anyway, so that's why I do 0.04 contracts for every 50,000. So if you're trading a $25,000 account, I'd probably just do a 0.02 contract, and the lot size seems to make sense. At least the way I've done it. Okay, so let's say I put in my, whatever contract. This is a buy market right here. I'm just going to show you guys how I do this. Buy market, buy market. And this is the start of the week because the scanner says to buy. And then what I'm going to do is a half an average daily range above this. I'm going to put another buy. It's going to be a buy stop. Okay. The average daily range on the pound yen, I believe, is like 130 pips. So let's go like 65 pips above the market because I go about half, right? So somewhere around here-ish, we would have a buy stop, something like that. Okay. And then we're going to go ahead and put buy stop in here. And we're just going to call this buy stop one. Okay. Then about 65 pips above that, we're going to do another trade. And this is going to be buy stop two, right? Right there. Okay. I'm going to put another trade. This could be buy stop number two. Okay. So these are all orders ready to go in case the market rips to the upside, which can happen, right? Obviously, this week it did, and they have not triggered yet. However, I am already in skins in the game on this trade. Okay. Then let's fast forward a day. Let's go fast forward. Let's see what happens. Boom. Stop right here. That puts us, we're almost there. Let's go a little bit. Pause. Let's go one more. Pause. Okay, this is about where the market was when I went back to the market the next day, which was last night. So last night I came in here and it was like, oh, bummer. This trade is down. I'm down on this trade right now. I'm down on the original market order, 57 pips. So instead of going in here and being like, I'm just going to add to this trade, which obviously in hindsight that would have made a lot of sense because we know what happened later, right? Because we know how pound yen went up a ton, but we don't know that. Let's just pretend we don't know that, right? So we don't want to add to the trade because what if this thing just keeps going down? Like what if this just continues lower, right? Well, that's bad, right? We don't want to have a really big position if this market just tanks, which is on the table. It's in the cards, right? So we have to protect ourselves, right? So don't add to the position when that happens. What we do is I say, okay, now that the markets come down, um, I still want to recover this trade and still make quite a bit of money with it this week, if possible. So what we do is we make those buy stops a little bit more appropriate. So what I'll do is I'll go, if I'm now Tuesday night, this is yesterday, I'll go 65 pips above this and I will replace buy stop one. So I'll actually move the buy stop one about 65 pips above the current price of the market, which is right here. If that's where I'm looking, that's about a half an average daily range above the current price. That's where I'm going to move the buy stop. So I'm going to go there now. And then about 65 pips above that would be like right here. That's going to be where buy stop two goes now, because now that the market's gone down, we want to move these in a little bit closer, right? So now I go right there. So I got buy stop one and buy stop two in. Obviously, we're already in buy market. Keep in mind, we're still only just in one trade. So we are down currently, the 50 pips or 57 pips on the one trade, but that's okay. That's okay because that's all within the game plan. So now I go to bed last night after setting this up. I was down on this trade at the time when I set this up. And then look what happened. I wake up to this, right? Okay, so I wake up, and when I wake up in the morning, buy stop one has triggered, buy stop two is triggered, and we are on our way, right? On our way to the upside. So now that feels really, really good, right? So that's how you can recoup a bad trade with very, very, very little drawdown, like very little drawdown. Now, the thing that could happen, and this does happen on occasion, is you could get triggered into all three of these trades. And if the market just goes down after you get to all three trades, that really stinks. And that can happen. It has happened to me a few times. Fortunately, I've recovered from that, and I've usually had enough winning trades to recover a loser like that. But, that is in the deck as well. Just want to make sure everyone's aware of that. Um, um, the other thing that you might want to consider to protect your risk at that point is you could also bring your stop losses up. You could actually tighten this up. The other thing that we did just today is I just booked half my position. So I took half my profits on this trade because it was FOMC. So about an hour and a half before FOMC, I just booked half my profits. And that's another way you can do that. Um, and this is what you'll do every night. So um, every night you'll go in and reset this, those buy stops. Now, if all three trades have engaged, I don't reset. So like I'm not going to reset this again tonight because I've already engaged with these and I've already taken profits, right? This is kind of a short week. We started late on Monday, and then we closed already a lot of profits because of FOMC today, and then we have NFP on Fridays, a lot of news events this week. And so tomorrow night is Thursday. I probably will just close everything in my portfolio tomorrow night, minus maybe a couple of price action setups, but that's it. Everything else will be closed just because I don't like to speculate those two news events. Those are the two I really don't like. FOMCs, which usually are accompanied with a rate hike or a rate adjustment of some sort. And you've got NFPs, which through my back testing that I've done on NFPs, most NFPs don't seem to work out in your favor from what I found. Although some do, it seems like most don't. So that's why I've kind of eliminated the NFP. And that's for pretty much every strategy we trade. It just doesn't seem, if you want to trade price action during NFP, I think that could actually have an edge. But as far as weekly trades go, it's just total speculation, and the news and the scanners kind of out the window during those news events. So that's just kind of how I do that. All right. So anyway, this is what I've been doing. This is what I've been doing. This has been very lucrative doing this, at least for the time that I've done this. Lee says, don't you use a really big stop loss on these? Yeah. In fact, technically, it's the stop loss is practically non-existent. I still put one in just because a couple of the prop firm accounts that I use require a stop loss. So I still put one in, but it's just a kind of a useless stop loss. Don't tell the prop firms I said that, but that's what I've been doing. Just because I've been just trying to satisfy their needs by putting one in, but it's really just my own risk management, my own adjustments every day on how I manage the risk. And it's also been me taking profits, closing out losers. That's what's been working with this. Now, if you don't like that style, and I don't blame you if you don't like that style, I'm not asking you to trade that. Huge disclaimer on that, right? It's up to you if you want to go in that. Also, if you want to trade this, I would highly recommend that you do it in a demo account for a while before you feel comfortable jumping into a prop firm account or into a live account, jumping into that. So definitely go through that process before you just jump into it. Just because it works for me, it may not work for you, right? Okay, the other thing that you guys can do, and let me actually just I'm just going to put this back the way I had it if I can, because oh, it doesn't go back that far. Dang it, because I had that trade set up. That's fine. I'll copy it back over. The other way you can trade this overnight strategy is you can take couple of ways you can do this. I've already shown you a few. The last way to do this is you can um, kind of like the bread and butter we do with the weekly trades, you do as an overnight thing. So what people do is they'll take the best trade that they can find on the scanner, and I would say one of the best ways you could diagnose that is if you can get a full sweep, like, where's the full sweep here? Like, okay, the Euro CAD's all buys, the pound CAD's also all buys. Oh, except there's no sentiment. Um, I think that's maybe the only one. Everything else still has all sells or all buys, but maybe there's a neutral in there somewhere. So, but anyways, what you can do is you can just pick the top one trade, and what a lot of people will do is they'll just take one trade one night, like Sunday night. If that trade loses in the morning, what they do is they'll put in what we used to do is an average daily range stop loss. However, we were getting a lot of people stopping out. So now we've kind of adjusted that to just a full average daily range. Your lot size is going to be a little bit smaller, but you're not going to get stopped out as much. So full average daily range stop loss, and then you just take one trade and you risk, 1% of your account type of thing, or half of a percent. Then if that trade wins, the next night you come back and do the same thing again. You just take the top trade, do the whole process over again. You just hold that trade until rollover, you close it at rollover, and then a few hours later you'll come back and set up for the next night. Okay. So make sure you close these overnight trades before rollover, just because it just doesn't seem like rollover is very helpful. A lot of people have hit their stop losses during rollover. So if you win, you go back and do the same thing again, and as long as you're winning, you just keep doing that. Now, if you happen to have a loser, what we've done is you can go in and take two trades now. So you'll come in, take two trades the next night, and then if those trades win, that usually recovers the previous day's loss, and you're now profitable, and you can just go back to one. Um, then what you could do is if that trade loses, you can take the top four trades the next night. And so this would be the third night. And then you just take the top four trades every night until you get a really solid win. The next time you get a really solid win, you go back to just trading one. So that's also a modified martingale. You're stopping after the third night. You're just taking the top four trades um, until you get a big winning night. Usually you will get that. Uh, but not always, right? I've had a couple of times where I've had to go into the fourth day and take four trades, and I took four trades the previous day, and it wasn't until then, or yeah, about, fourth day where I get the big profit, right? So that's another way you could potentially do that. Now, there's also nothing wrong with just taking all of those trades. That's a lot of trades to take every night. I think it's too much work, honestly. I think that would be almost not useful unless you're just taking the weekly trades. But you could just take all of them and every night just reset them using the same lot size. Just every night, just reset, reset, reset. I don't know a lot of people that do it that way. There are some, and I'm not hearing the best results with that. But that is another way you can do it. I have found where people are making most of their money right now is through, like I said, it's a modified martingale where just each night you're using an average daily range stop loss, and then you're just taking the top one trade, and you can pick which one that is. It really doesn't matter as long as it's a strong buy or strong sell. That's fine. And then the next night you do another one um, until you do two trades or four trades until you get a big win. Um, And that win usually, when I say big win, that big win will recover any losses you had on the previous 2 nights. But I don't like to double down to go to 8 trades. I don't want you going down to, I don't want you risking 5, 10% of your account on a night. That's not a smart thing to do, right? It's really not smart. We also don't use a take profit on these. You just let them sit and close them at rollover. So if they're very profitable, just wait till rollover. No take profit, just let them run. Same thing with losing trades. If they haven't hit their stop loss, but they're losing, just close them at rollover and then count it as a loss in your journal. Okay. And that's the way that those are the ways you can do that as an overnight trade. I do that, and I've been tracking my success, and I've had success doing that, especially with the modified version that I mentioned. Where I've had the most success, and that's why I put 4 accounts on this, is doing what I just showed you guys earlier, that demo I did right here, where I just use the buy stops and sell stops to add to winning trades. And then if a trade loses, I don't add to it. That's where I've had a lot of success recently. And that's why I put 4 different prop firm accounts on it, because it's really had a lot of success. And my drawdowns have been really tight. Like, I've been very surprised how tight my drawdowns have been. Very, very happy with that. Can you do these through FOMC/NFP events? I think so. I think you can. The overnight trades, yeah, I think you can. Um, and then just continue the process the next night after FOMC is over or NFP is over. I think you can just continue that process. Yeah. All right, guys. Well, I'm going to go ahead and wrap up. We got 10 minutes. We'll do our webinar on the COT report. I hope this was informative. I hope this was helpful to many or all of you, and look forward to hearing your success and also your feedback on the different ways we can trade overnight and using sentiment and the scanner. And but yeah, anyway, we'll go ahead and wrap up. I appreciate each one of you, and we'll see you guys in the next webinar. Thanks for coming.